I believe we are live. Very sorry for a couple of minutes of delay. YouTube streaming had some new functions which we were trying to figure out. I can see that now both shorts kind of streaming and the full what we call 16 by 9 widescreen streaming are now available on YouTube. So maybe I think you can see this video later in the form of a short as well, maybe in that kind of 4 by 3 ratio, right? I mean, whatever we call it, portrait ratio. Hi, Abhinav. Hi, Gaurav. Can you hear me? I can't hear myself on the right side. I can see somebody also sending me some hearts, so which is also good in the start. Before you start throwing stones. So that's how it is. Markets are tough, man. Markets are very tough. All of us are in the same boat, and I only can kind of reassure you that our job, our duty is to move all of your money in the right set of quality names, in the right set of quality companies, so that even if you're stuck with drawdowns, even if you're stuck with a very lower number in terms of your overall returns, for a good period of time, which we have seen now in last 1 year, at least you are always confident to add more money in the drawdowns. You have to similarly treat how you treat a mutual fund SIP. You never look at it, you keep adding money, and that's how you average we call it dollar cost averaging. So similarly, what we are also trying to do for all our discretionary portfolios as well, we are taking a very conscious call. Our models are suggesting as well that there is no rush to kind of do some adjustments in most of our portfolios, because all of the companies your money is in are very very good quality names, right? Gaurav can hear me, and he's also asking swing trades for free for some time for small K subscribers for a month at least. कुछ खर्चा पानी निकले. Gaurav is asking कुछ खर्चा पानी निकालने के लिए he would need some swing opportunities. Um, I think for all of these small case subscribers, our research portal was made available for beta testing. If you are still interested to explore our research advisory platform, where we do provide all of the advisory, you can always ask the team to get you added, Gaurav, there, so that you have access to your kharcha pani in case it works for you that way. Jokes apart, what we will do, I think we'll talk about the agenda for today. I think it's important to analyze market pulse in terms of how the market is doing. Abhinav, yes, you can add money, more money. If you have seen that momentum trend has been skipped for the rebalance last night. Now, just to kind of Gaurav, it is just to come back. Gaurav, I'll come back to you. So Abhinav, yeah. So answer your question. As you would have noticed that we had the rebalance last week, late last week, and then we wanted to decide on this week whether we should actually execute some rebalance or let you add more money in the same companies by averaging it down, your losers by averaging it up rather. The decision was taken basis what we conclude as an outcome that rebalance kept करेंगे. Just a kind of a note, in case markets start to show some good kind of upward side momentum, we would be the first one to cater to it and would adjust your basket if needed. Abhi ke liye you can absolutely add capital in Alpha blend and momentum trend as well. Alpha blend also would be skipping the rebalance today. Right? I think if the rebalance is tomorrow. So I think I saw your comment and that's why you were asking, and I've answered that question. I just saw Alpha also. Abhijit, you can add in case you wish to. Answer to Gaurav. Yeah, Gaurav, it was earlier free. It was for all of the testing work because you were supporting us to go live. Now we went live with that portal, with that product. It's absolutely for a different kind of a user base, which is not into model portfolio investing, but more about managing capital on their own and more of a short-term kind of strategies. However, if you wish to explore, I know it's not longer free, but if you wish to explore, we can absolutely give you access. I don't think it's a big thing. Since you are a user, since you are already a user, you are our subscriber. I would do whatever I can to get you access to any update for uh, alpha momentum small case. So alpha momentum small case is also known as multi-factor small case, as we all know. It has been doing tremendously well. I think it's the small case which has done the best across the industry. When I say across the industry, across all the indices. So I'll quickly take you through a view where I'll talk about all of this as part of today's meeting. And we'll of course discuss how markets are shaping up, what do we see in terms of numbers, etc., etc. So I think balance basket, just to kind of give you a flavor to that, that balance basket multi-asset remains the talk of the town because it's the kind of only basket which is surviving and not just surviving but generating a lot of alpha over what we say over the broad markets because broad markets are also in that phase of up and down. So what I'll do, I'll quickly maybe see on this screen and share my screen quickly to show you that. So my job is not to show any numbers so that it's totally compliant. And if you see down from a month perspective, now the quadrant simply represent this is the part where it is it's a linear line because it is both x-axis is 1 month. We simply mean that this line is where the alpha lies and positive alpha lies. And if you see Nifty small cap has been on the lowest spectrum in the last 1 month. So Gulfi could beat all of it if you see. And then alpha index itself is the bottom. So small cap even did worse. Small cap index did worse than alpha index did worse. Balance basket did awesome, great stuff. Nifty 50 is also, of course, could not turn negative positive in the last 1 month, but nearing about multi-factor. So multi-factor and Nifty is tightly coupled right now, and rest all are all right. We couldn't beat the other like mid cap, like the Nifty 500 or Nifty 200, right? On a kind of a because we are talking now every 2 weeks, so I'll say a week and a month kind of quadrant would be good to see. So if you see all this is all weekly. This is all monthly on the axis. On the horizontal line, you see all of the kind of 1 week numbers, and on the vertical, you see the 1 month numbers. So you see on the 1 week basis, we're doing very, very kind of strong. Multi-factor has been doing all right, having some strength. And this is sitting both Nifty 50, 500. All of them are sitting at a very, very tough place, right? So multi-factor doing great, and you want to talk multi-factor from a perspective of say what we call. And I think if you look at December also now, the only basket I see which is positive across all of the market is only two, whether it is any broad market or not, and that I think will be, if I'm able to scroll it right, it would be, yeah, Golfi balance and Golfi multi-factor. I think rest all are whether it is any of the market indices are pretty weak, right? Anyways, numbers is never an intention to be seen. The whole idea was to kind of give you a perspective that multi-factor strategies and balanced multi-asset strategies are doing very stable, very all right. And of course, alpha kind of strategies will be struggling as we all know. But we are doing much better than the alpha index. We are doing much better than the small cap index. So that's the silver lining, I'll say. From a perspective of market, we'll talk about public data, which is available, which was published by NSE, and we'll take the remaining 15 minutes, of course, your questions, and also we'll discuss the output. Before that, I'll also quickly show you where the market is, where the market strength is headed. And you have seen all of those dashboards in the past, but my duty is to again show you. Anyways, we will meet as part of our monthly AMA meeting this Saturday. So that would be where we will go deep dive into each of it, so that you have full clarity of where you are placed. Now, if you talk about the momentum dashboards which we publish, and if you look at the numbers, आप देखोगे कि हम अभी भी स्ट्रगल कर रहे हैं हमारे पास कोई भी ऐसी सेक्टर नहीं है. Of course, the things are much brighter than they used to be. You remember we were used to discuss in this YouTube, and every sector was in the last quadrant strongly bearish. Now we see things moving in many sectors. We have started to see things moving from left to right, right? I mean that way, and then now circle up. So of course, market is there's no bullish sector right now. Um, Weekly bullish, of course, the banks are all right. They're weekly bullish, and now you see some of the auto mobility, PSU, metal are the spaces where there is some level of kind of strength remaining. Rest all are still struggling, whether it is tourism, whether it is rural, PSC, they all are kind of struggling, right, in a big way. So that's about the view. Now let's open a public document, which of course is published by NSE itself, and I think it would be good to it would be good for me to take you through, and that's why I borrowed the title also from the document which is called Market Pulse, right? So what I'll do now, I'll quickly take you through this document, which will we talk about how, of course, it's a big, I don't know, maybe 200, 300 pages document, right? So we will not discuss all of it. So all the attribution to NSE team for doing wonderful job of putting all the data together. Our job is to kind of read the context of how we are doing. So we'll quickly go to absolutely I mean, it will, if you go detail, I have also shown this, the November version in our 2 weeks ago meeting. Now this is the latest version which has come out, I think 2-3 days ago, and it will talk about data up to November, right? एंड यहाँ पे आप देखोगे तो थोड़ा आपको ऐसे समझाना मुश्किल होगा, बट मैं अगर यहाँ का नंबर दिखाऊँ आपको, आई थिंक दिस विल बी द फर्स्ट स्लाइड विच यू मे बी इंटरेस्टेड, which is the pain area for all of us, right? Now, see, we are in a similar phase. We all forgot that from 2020 to 2024 bull run, we also had seen a period of 2022 where markets shown a bit of a correction, and as I keep saying, the silver lining is that you see a very similar numbers which went out of our country, right? The kind of net outflow or the negative inflow versus what we have seen much higher than ever, right? The highest ever, if you think from this last 10-year perspective. But if you see the DI participation back then in 22 and DI participation now, so that's more than 2x, right? That more than 2x, 3x rather, I'll say nearly, not really 3, but yeah, 2x, more than 2x. So FPIs have done absolutely not justice to us in terms of continuously taking money out of us. But if you, and similar numbers in USD terms in both the years, but if you think from a DIA perspective, the numbers have doubled, more than 2x, which means that's where our Sanjeev Goli ji, मैंने आंसर कर दिया Alpha Blend के बारे में. I think if you look at the recording, you will see that Alpha Blend is underperforming the broad market, but Alpha Blend will be outperforming the Alpha Index, which is the benchmark for Alpha strategy. So once you go back to the start of the recording, I'm sure it will help you. Anyways, we'll do the deep dive in our Saturday Zoom meeting, Ask Me Anything meeting, where we can discuss further also. So coming back to that was the main kind of highlight that domestic institutional investors And nothing much on the. I mean, we have not seen too much participation, anyways, from kind of net retail in this year. It was at the very high last year when it was a booming market, but absolutely not now, right? I mean, of course, and the individuals here includes all the ultra HNIs and NRIs and individuals and proprietorship firms. So not just say retail as such. Now coming down to the the summary. So it all talks about that how we are really moving from a small base of investors not so long ago to a very high base of investors now. And if you also talk about we even in the last meeting we discussed about the growth GDP growth numbers and markets not reflecting in real sense. Now the thing is, I was talking to a couple of the investors yesterday, and I mean there are of course two parallel school of thoughts where one school of thought is absolutely that inflation is in control, GDP is growing at a good rate, interest rates are kind of being managed very well by RBI, and therefore the money and the consumption might boost, and market should kind of get better earnings in the up subsequent quarters, and market will start kind of trading at some premium. And the assumption in that school of thought is that market is already not expensive and is it trading at the right value, whatever 20x multiple it trades. Another school of thought is, which is absolutely parallel school of thought, which is if you just take out PSUs and say financial services, and especially PSUs which trade at a very low price to earning multiple out of this Nifty 50, out of this Nifty 500, you may end up finding that the markets are not at all undervalued, they are rather overvalued. And since there's two school of thought, the only common survival point would be that earnings should come, because without earnings market won't sustain. So my take on that, on both side of by reviewing both side of school of thoughts and by our own data analysis, are, we are very clear that this is not a broad market which would make money for all of us by being anywhere, right? It is a very selective market and very bottom up market where we have to really choose and select the right companies and the right kind of tailwind sectors to be able to continue to kind of generate some alpha, if that is the main intent of being in the equity market, right? It also talks about couple of things. Now, if you just see this, right? If you just see, my whole idea of opening this was just to show you index, because of course this you will read at your leisure time, and I would only want to answer questions in this meeting, and we'll do a detailed deep dive on the data on Saturday. So if you see this, just the headings, and I think that itself give you a lot of food for thought, which is we all know that GDP numbers came out very strong. It surpassed all the expectations. RBI monetary policy also has been kind of continuously in favor of boosting the liquidity by the rate cuts, which has been now subsequent. I mean, over the last say 3-4 meetings, of course, 100 basis point in one meeting itself took time to kind of, it's still getting passed on, but then further rate cut for further liquidity boosting. The not so great data which came out that the industry, right? Is it the production? Is it kind of a slightly lower number, which I'll of course talk about. I'll maybe take you to the section, and but if it also one more thing which came out of this study is, and I mean, which is the number coming out is the lending growth. The lending book of the bank is absolutely growing, which is good, but the deposit growth rate is very, very slow, and which it kind of highlights that the credit deposit ratio is now above 80%. So there has to be you have to be very selective. You have to really look at the quality of the assets. Otherwise, they will start turning into non-performing assets, and banks have to really compete, I'll say, to be able to command more and more deposits. Otherwise, the lending it's again ultimately right, very, very linked to each other, and therefore the credit is now right now outpacing the deposit growth, and banks have to be really, really kind of competitive, which simply means that unless you offer higher interest rates, you won't get deposit growth. And if you don't get deposit growth, how would you further lend? And if you only want to kind of do some kind of management, in the mean, you will have to, I mean, of course they shouldn't, but ultimately it may lead to compromise in the quality of the lending, which may ultimately affect their own books, and therefore that is something to be looked at. Also, this section then will talk about all of what happened in the market. So I'll first talk about market roundup because that will be something you would be interested to know after we last spoke. It will talk about every single thing in terms of what happened, what is happening in the emerging market, what is happening, where is India placed in the overall emerging markets, and how US did compared to India. Rupee depreciation is also one of the talk of the town because that also is leading a lot of FPI's outflow because of course they'll find more value of their dollar in the US versus in India. And that is what I think the section talks about, that we are sitting at a 4.5% down at the close of FY25, right? Which is which makes INR as the worst performing currency, Asian currency this year. So what happened? I think it does that. I think I saw the post. I think one of our teammate posted around dollar and rupee ratio of exactly +91. So India country code 91, right? So of course today I think we see some kind of appreciation there, but that's also something to be kind of looked at. Now this table, which is again public data, it will talk about how we have done at the end of November, where were we earlier, and kind of returns it. So if you see numbers does not look bad from a perspective of a broad market, but as you all look at your portfolios and if you look at your small and mid specific mutual funds, you would see the real pain, right, which is happening, which you can see from a perspective of, say, when you go down and you can see all of the indices together. So you will see that how small cap 250 is still sitting at a huge negative number, and micro cap is of course struggling, and even Nifty. This is again a like a year-to-year basis. This is the trailing returns, right? This is the trailing returns which you can actually look at from a month-to-month perspective, from a 12-month trailing perspective, total returns, and that is price returns, right? That's how you see it. This is for all of your thematic. So all of this we will discuss as part of our Saturday Zoom meeting, where we'll talk about how we are positioning ourselves in terms of sector placement and how different themes, sectors in the country are kind of moving into say a cyclical kind of growth. And we'll talk about all of this as part of our Saturday meeting for sure. This document is a wonderful 270 to 80 pages document, which will talk about what all happening in the market across all sector indices. So you see how indices like media, IT, realty is still kind of sitting at a very, very low number, right? In the context of the price returns. Okay, and then so that's what about I think my agenda of giving you a flavor, giving update on how we are positioned, giving update on that. Do not worry. I think that I've been saying now for some time, and I see a very clear sign from our investors who are here for long term. They all have done a very good job. They all have done, say kind of renew their baskets and continuing their investments. People who actually came from a very short-term mindset perspective to make quick bucks are no longer say subscribed, and they have exited their investments because they came with a mindset of I don't know very quick gains, which anyways it never happens in the market. So good to so now see that only the people with resilience and people with clarity will continue post this market correction, and people who anyhow have no clarity and they just came for quick bucks will not return to markets, which is good for the market, I'll say, because and good for them also, because there's no point we kind of creating products for people who are not yet ready for equity investments, right? And therefore, they have to first kind of focus on their basic kind of health, life, insurance, emergency funds, and then they should kind of start taking, right? The risk on, I mean, of course, asset allocation becomes primary here, right? The main thing is asset allocation. I also talk about maybe before we close, and if we don't have question in terms of what industry is buying, when I say what industry is buying, what DIs are buying. So if you look at November data, which came out last week as of 30th November, I think the highest buying is happening now in IT. I see the MFs are buying, seeing a lot of value in IT. There's a lot of buying happening in telecommunication. There's a lot of buying happening in FMCG, which is good. And that's where I see that the mutual fund industry is kind of buying from an industry perspective. If I go, maybe I'll just check if I go and go one level down to see if I can see specific sectors in my data. So from over industry perspective, yes, IT. And if I further slice it down, let me just slice it down at my side before I kind of show you. Yeah, within IT services companies, engineering services, companies are really attracting a lot of capital from the domestic institutions, and telecom is one also. Even as I said, diversified FMCG, even non-ferrous metals, even textiles and apparels. I think there we see that industry is kind of buying and where we see that there's a lot of kind of I'll say unwinding happening is on the petroleum products and household products and entertainment and media. So these are the kind of sectors where we see some kind of unwinding happening, and on the other side, IT services, engineering services, telecom services, diversified FMCGs, where we see some buying happening in the industry. Let me see if there are questions. So this time, so YouTube told me that it will show both the short kind of, so I can see in my stream that there is a short kind of a view and a full screen view. So I hope to see that some outcome has come, which is useful to you. And don't worry, right now, I'll tell you with continuous focus on we kind of creating our model portfolios or updating the model portfolios to bring your money in high quality companies is what we focus on. And I am sure it is a tough period for you, for all of you and all of us, but this too shall pass, and I'm sure that 2026 calendar year is a bottom up market with a lot of hard work to go into right selection of companies, and I think that is what we are here for. Right. So with that, I think I would like to stop the streaming, and I'll speak to you all on Saturday 1:30. I'll confirm that, I think 1 p.m. as part of our usual monthly Ask Me Anything meeting. Please do join and we'll speak then. Take care. Bye.